Shankar Sharma, Vice President and Joint Managing Director of First Global, joins us. Shankar, morning. Thank you for joining us. Shankar, you recently made a point that that the worry is even after 25 years of structural weakness of our economy, we've not changed despite evolving. And even now, the weight of the market is clearly centered around macro concerns.
Well, I think you're picking up from my tweet, and the fact of the matter is that if you just look at it, and I was sitting and in these kinds of moments, as we saw last week, you have to spend a bit of time reflecting. And I was just saying that why is this a recurrent theme in our economic history that each time oil hits anything above 60, 65, 70, that a crisis starts to build up of some kind, big or small. And why is it that our economy structurally still remains pretty much what it was, but 25 years back or 20 years back, that it's a high fiscal deficit and high current account deficit economy. The way we have had no real exporting excellence or exporting edge or competitiveness built in the last 20 years or even 25 years since the reform started. Nobody really in the world thinks of India as an exporting nation, which is a fact. We continue to remain a large importer of various things from across the world, including mobile phones now, and the 10% value addition of just labor costs being shifted here and all that. I don't count that as much. Basically, we're still importing mobile phones more or less. So structurally, what have we achieved? And to fund these deficits, including particularly the current account deficit, we still remain reliant and beholden to foreign flows, whether it's FPI flows or FDI flows. So while on BOP we look okay, but the moment you come to the CID part of it, the trade deficit part of it, things just fall apart. And again, monsoons are the other recurrent theme, that whether monsoons will be good or not. Why is it that we've been unable to fix these core structural issues in our macroeconomic framework? That's something that bothers me a lot.
Yeah, it bothers actually all of us, and there's so many questions that need answers. But Shankar, India's taken it on the chin on the macros, as you pointed out, and some other emerging markets have been very weak as well. So do you think that this is, largely to do with not just India, but really an emerging market story that's going downhill?
Yeah, I know. I think this was good data. And I must interrupt that. So we have had some Nepali currency which has fallen more than India. Rwandan, whatever currency is there, that's also, and in Botswana, I think, is also fallen. Yeah, sure. If we want to count ourselves in the company of these kinds of markets, and there's a list of some 20 countries which have done worse than India. If you start talking of India in the same breath as Turkey and Indonesia or Argentina, then I think we have a serious problem. If those are the comparatives we are now looking at.
Okay, let's not do that then, Shankar, and let's try and match up and scale up with the best. How is it that you're analyzing the entire emerging market setup right now? Because US continues to hit record highs versus what the emerging market basket is doing, which has not done very well overall.
Well, it's under pressure only in terms of the relative performance of emerging markets versus developed. But on absolute basis, EMs have been largely static. So if you look at in dollar terms, the emerging market ETF, EEM, that's been around the 41, 42 kind of levels for quite a while now. That's not fallen off a cliff. US, of course, done very well. Japan has done very well. But coming to the BRIC pack, which is really where India belongs, right? Brazil is now, of late, has done really well. Russia is just blowing out the lights. I think it's nearly all-time high in terms of stock markets. China, which has been sort of, tepid, has kind of stabilized. The problem I have today is that this is the first time I have seen in the last 20 years that without there being any global macro crises, and there's nothing, it's not as if the world is falling apart like 2008 or Asian crisis or dot-com bubble, nothing of that sort. Without there being any global macro crisis worth talking about, India is just looking very, very fragile, looking very, very vulnerable. Have you ever seen a situation like this. That is the point that is really worrying me. If we were falling as a large pack of global macro crisis children, that's okay because we can't be immune. But here the world is okay. The world is not falling apart. I mean, you're talking some really outlier countries. Russia is not falling apart. Okay, Brazil is not falling apart, or China is not falling apart, US is not falling apart, Japan is not falling apart. We are falling apart. I mean, why have we suddenly become from the club of fragile 5 to a club of fragile 1? I mean, that is what is worrying me as an Indian more than anything else.
Okay, all the gains are going again. So 80 points down on the Nifty. The selling again is, look at Vedanta down 6%. Metals across the board have got crushed.
Broader markets also.
Just got crushed. The broader market is negative. Leyland is down. So the selling only has intensified. I mean, HPCL, BPCL had fallen 40%, and if they're up 2%, that's a very dinky little appreciation. So the bottom line here is that the pain is here. The pain is only getting exaggerated. Reliance, Bajaj Finance, Maruti, Indiabull Housing, Dewan Housing. So these are like good quality institutional owned stocks. Foreigners have not sold some of these stocks in first of the patches like 2013, 2014. They've kept the faith going. They've bought India on a decline, thinking that the problems have been structural in nature. And like Shankar said, my only fear is that US markets have not even corrected by 10% from the recent high. If they correct, where does money move? I don't think it will come back to emerging markets. It will only go back to US treasuries. It will only back to the dollar index. So what 74 looked like an unrealistic number on rupee 1 month ago, it's there now. And you never say never in financial markets. That's what I've learned. So Shankar, how have you analyzed the market so far? It's been a patch of weakness for 8-9 months. Do you think that the selling has just about started because Nifty has not fallen at all?
Well, I mean, the market, in terms of the weakness part of it, started from the small cap space post the budget. So I think January, February onwards, it started to exhibit the signs of, and of course, remember, they had gone up 4 or 5 times in 4 years. I mean, that is extraordinary returns by any standard. So I was prepared for a significant down in this year. Whether the full year it remains down or not, that's a different matter. It looks like it probably will. But I was expecting a 20-30% downdraft in small caps. We have seen that. I think we are down 25-30% on the BSE small cap index. But of all markets I have seen, and I've always said that it's easy to call bull markets. Bull markets are very easy to pick. You can do that in your sleep. Bear markets are very, very hard to call, because in bear markets you have to make a call whether stocks can go higher or not, or have they gone up high enough. Now, if you see from July onwards, while the small cap market was down, the large cap market was painting a completely different picture. So you had, the Nifty or the Sensex making new highs, but all on the back of just a handful of stocks. And I remember in July, I was sitting at my home with a few select friends, and I said that, look, I've seen this deception in markets many times, and it always ends badly. Hard to say when it ends. My view was it would end by November or December, when the election results of the assemblies came out, kind of as acting as a catalyst. So I was wrong in the timing, that it really fell apart from September. But any market in which the broad market is down, just a handful of stocks keeps making the index in the mainline indices look good, that is usually a market of deception, a market of distribution, and that's exactly what has happened. So it does not surprise me at all, the kind of ferocity we have seen.
Yeah, but it's been pretty gripping. First few months, Shankar, we saw the small caps and the mid caps fall pretty badly. I remember talking about that way back in May, June. Then the large caps, which were leading the rally, started melting as well. And finally, it seems like both those trends are now converging, and there's a more synchronized move. How much more damage, in your view, can there be for the markets going forward from here?
When you're asking me how far does it go, markets will surprise you on both sides. And considering the macro situation that we are now faced with, because think about it, which is what I tweeted today, that anybody who says that the weak rupee is adding to our competitiveness is great for India, I mean, clearly is not doing the math. Because whether our exports go up or not as a result of a weak rupee, that's a big question, and I don't think it goes up. I know a lot of exporters who say that, साहब वो तो अगले दिन ही आ जाता है फॉरेन बायर का कि भैया $1 की चीज़ को 90 सेंट कर दो, आपको 10% तो एक्स्ट्रा मिल रहा है. इधर में आपके खर्चे 10% नहीं बढ़े rupee terms में. So our exports don't command that kind of pricing power internationally. So they are forced to rework the price down in dollar terms. Now, so that's a big gamble that you depreciate the rupee or you find the rupee depreciation is good for the export, because I don't think it adds up at all. But the certainty is that your imports go up by 10-20% as much as your currency has gone down. Now, as a result of that, today we have added, I think, or by the time we are done with this oil move, which might be $100 or might be 120, who knows, could be even higher. By the time we are done with it, we would have added another $100 billion to our trade deficit, okay, and therefore to the CAD. I mean, that's like, a significant number. I mean, you're talking an aggregate CAD looking potentially at an aggregate. When the CAD is 0.6, and I've been bullish oil for about 2 years now from $30, I had said that we're easily going to go to 2% CAD. I think we are more likely at 2.8 now. And I think you're going to go to 4 if oil goes to 100, which looks like a more or less a certainty. So that 4% here, 4% on fisc, I mean 8% twin deficits is not something to be trifled at, and that's why the markets are getting really spooked.
Shankar, your call on crude has been quite accurate so far, but for the markets to reverse, don't you think it has to be an earnings revival as well that is imperative in the second quarter, or do you think a reversal in crude would be just enough?
Look, I mean, earnings, nobody knows. I mean, it might be okay, but when macros appear so daunting, then at the micro, some earnings being better will not change the overall trend. Yeah, what might happen, and I think it will happen, is that individual stocks you will start to see that while overall markets were down for a month or 2 months, some stocks are up 50%. So in a bull market, such occurrences are probably 70-80% of the market. In a bear market, stocks still go up. It's not that everything goes down, but those occurrences become 10-20% of the markets. Those are the places where you'll end up, if you watch like a hawk, you can end up with a very decent portfolio over the next 6 to 9 months time, which will give you solid returns for the next 4 or 5 years. That's what, if you are really interested in looking at market, that's the spot you to be looking at.
And the last leg of meltdown has been triggered because of financials. What is your reading there? History is going to repeat itself?
Well, the only cycle I've seen it not repeated the dot-com bubble, when Sama Financials missed out on creating a bubble. Maybe we were all too caught up with the, IT pack to bother about banks. And that time it was not a big part of the market anyway. We didn't have HDFC Bank with a market cap of 3 lakh crores. It was a far smaller bank then, and none of the Kotak banks or IndusInds were there, or Yes banks. So that came later. So, I mean, I was telling somebody just the other day that I was looking at IPO pipeline prior to this crash, I think in August. And there was a comment there were several comments by mutual fund managers saying that we want BFSI, which is banking, financial services and insurance exposure. We are looking at BFSI plays, financials. And I was telling somebody that, look, this is nearing the top of the financial space, because when people are clamoring to get on board with companies that add no value, really speaking. I mean, giving credit creation cannot be value addition. So almost inevitably, financial is the root cause of every market meltdown in economic history, barring a few here or there. So ILFS, I think, was just an excuse. Overall market was way long financials, and those are the areas that get punished the most.
Do you think now, Shankar, the signs of a slowdown are becoming imminent, be it the way CV financiers are scaling back guidance or the way auto numbers are turning unimpressive again?
You know what? Again, people don't look at data, and which is what I always say, that this is the characteristic of, this is one of the tests you use to determine whether you're in a bull market or a bear market. One of the tests I saw in July, August, was that a lot of small cap companies declared very good numbers, blowout numbers, and yet their stock prices fell. And I told my colleague that I think we are in a bear market. If this is what is happening, this is a clear bear market. This was back in July, because these are, straws in the wind that you pick. For Maruti or for Indian autos, let's say passenger car market, back I think in the first quarter itself, there were enough news reports saying that auto growth in the metro cities had actually become negative. So all the growth was just coming from the tier 2, 3, 4, 5, whatever, how many tiers that there are, towns. And that's because of obviously, all the ride-hailing apps and all that. People don't want to, necessarily buy a car, or at least a second car is off the table now. And I said that, look, and yet Maruti continued to do very well for 6 months after that. With this obvious data that, look, now your key markets are saturated, actually going negative. It's all going to come from the third tier markets. Yet market continued to ignore it. So Maruti was in a bull market, and you can see how quickly a Maruti bull market has become a Maruti bear market. And I've liked it for a long, long time. But in March, when I saw the data, I said, now this is the time when you actually exit Maruti, because clearly nothing can run, perennially based on only tier 2 and 3, town performances.
How is it that you're approaching the market right now? I mean, do you wait on the sidelines? Do you buy this decline? What is your approach?
First of all, we have to finish counting our losses. So, we are still, wading through all the losses. The fact of the matter, I'm quite relaxed about it for the simple reason that, I've talked to any number of companies the last couple of weeks, and I look at small caps. I mean, I'm not interested in buying ICICI Bank and Axis Bank and IndusInd Bank and, Kotak Bank, because that's not the space I look at anyway. And none of the numbers are broken. So none of the companies are telling me that, look, situation is very bad for us. As long as that logic holds, I continue to be very relaxed. And I always say this, that, you need a serious bear market to make serious wealth. It's very, very, very simple. So Warren Buffett's big wealth started post the oil shock of 1974, and he continued to buy stock in the aftermath of that for the next few years, and from 82 the big bull market started, and that's how you make serious wealth in a bear market. So if you are smart, for the next few months time, I think you will get some amazing opportunities. You need to have a lot of guts, but I think that will build the foundation for a reasonable portfolio 4-5 years out.
So what kind of small cap pockets do you prefer? Because you've told us in the past that you like chemicals. Do you also like some additional themes now?
Well, I mean, I can't talk about individual stocks, but anything which is commodity is looking good, because that's a space that will do very well. So all your industrial metals will do well, oil related things will do well, chemicals will do well, specialty chemicals will do well. So that whole complex, I really like. I mean, there's no doubt about it that in the entire sort of debris of the market, that is the space that I think will give you very, very good. And remember, in a bear market, it's not as if everything falls. People make a mistake of bear market, तो सब चीज कुछ भी नहीं देखना चाहिए. That's actually a big mistake, because that's where you find mispriced opportunities of good companies, good sectors with good businesses. Nothing is broken. And commodities, I think are in very, very good shape incrementally. So stocks are down. Many of the mainline commodity companies are down in the last few months' time. I think it's time to go buying those.
Right, Shankar, when you speak with promoters or travel around, what are you gathering on consumption in the non-metro side of the country, tier 2, tier 3 cities? What is the data looking like?
Well, I have not traveled lately, just to clarify, but I've spoken. And on the consumption side, because consumption drove India's GDP also in reasonable part for the last couple of years, my fear or concern is that it was also driven in large part by this whole boom in financials. So the NBFC lending, and I must tell you this, I was at a party a few months back, and I think maybe 20 people, or maybe 10 people, 10 or 12 people, out of which I think 7 had started NBFCs. So I came back and I told that I think this is the absolute top of the NBFC boom, and I'm not making this up. I swear to God, this actually happened. And when I came back to Dubai, I told that, what, I mean, out of 10 or 12 people in the room, 3/4 of them had just started NBFCs.
The ex-banker peers from your city days who are all aiming to start NBFCs?
This is not a comment on them per se. Please understand, I'm saying it in more as a joke. But I mean, these are again anecdotal things that you over a history of investing you tend to pick. that which way the wind is going to blow. But they're all very smart people. I'm sure they will, do very well. But the fact of the matter is that the NBFC or the fintech lending part of it drove or has been driving consumption. And if that slows down because of whatever defaults or environment turning bad, that might hit consumption. If that is hit, then you will have two-wheelers or cars or durables, etc., which has been a big bulwark of the bull market, or FMCG, which is I think why FMCGs have also been, normally they are very, very strong in these situations, but this time they are also very shaky. I think that's what's playing on the minds of people, that this whole lending-inspired consumer boom, may peter out.
Going to talk politics. How's the political landscape looking? Everyone is now having an opinion as to what will happen to elections 2000. What will be the outcome of general elections in 2019?
I think it's a little too early to say, because one thing what I read in the papers from political analysts is that definitely the BJP can't hope to repeat anywhere close to the performance of 2014, and which is reasonable, because that was like an outlier performance when every single thing that needed to worked. Clearly, we are not there. So if they were to be short of seats, then how will that math work out? So now these are imponderables, but that will play a very, very big role in 2019 for sure. And if the market does end up believing that this particular formation doesn't come back, I think you're looking at a problematic situation, at least temporarily.
Right, but regarding the Mahagathbandhan, Mayawati is moving away from Congress in UP, Karnataka, Chhattisgarh. Does it seem that the Mahagathbandhan is weakening out, and that may be a bit of an overhang as well?
Yeah, well, I mean, market is comprised of believers and non-believers, more believers than non-believers, so they will clutch at the straws for sure. The fact of the matter is that it's too premature people posture. Politics is too complicated a game for us stupid market men to understand. We are very, we think in very simple terms. Politicians are a class apart, having known a few of them. They are far more intelligent than we can ever hope to be. So it's too early to call, whether Mayawati is on this side or that side. And in any case, at the state level, she has always fought against the Congress. So in Maharashtra also she has competed, in Andhra she has competed. So I don't think state you can really extrapolate to the Lok Sabha level just yet. But I think, I'm no expert, but my view is that, when you're 9 months away from that occurrence, I think we should wait before we form any conclusions.
Right. Shankar, have to ask you this, given the kind of fall that we saw in the markets on Friday, how is it that you analyzed RBI's commentary this time, and then what the market made of it?
Well, I mean, what I found intriguing was more the fact that, what the market's reaction was. I mean, I was expecting them not to raise. That was my belief. Okay, and I was rewarded for that belief from only a limited point that I was right theoretically. From a trade perspective, I thought market would stage a rally. But, the market the bottom just fell out on the currency and the market after that. So the way to analyze that is very simple, that the market correctly said that, look, you ought to be protecting the rupee, and raising rates is the way to protect the rupee. Now that you've chosen not to protect the rupee, you are going to cause a serious problem down the road for the country's macro, the CAD, and everything. That's what spooked the markets. The markets probably actually would have preferred a hike. Normally markets don't like a hike, right? I mean, that's the order of markets. This time markets actually, and that's the reason why it actually fell, because I could find no other reason why it fell. And then I sat and thought about it. I said, look, the market is saying, look, protect the rupee. Otherwise, this thing is out of control. You can't have 4% current account deficit all over again, and which is why it took it negatively that the RBI chose to not hike.